Hello, Maverick traders. It's the 23rd of April. It's Tuesday. Joe with you here. Let's get into a market roundup. I'm going to get into my 2 cents and give you my ideals and my opinion. Let's break down the meaningful news of the day, some technical analysis and some of the charts as we are starting to break some support levels, and let's see if we can't share some trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you could see that we had a pretty sizable bounce, and these markets were definitely due for it. Overall, how did we finish? Well, the Dow up about 0.7%. The S&P and the Qs actually had the biggest move, both over 1%, Qs over 1.5%. Russell's as well over 1.5%. Oil bounced, but gold slid a little bit, which I would expect to happen with these markets the way that they're behaving over the last few days. Over onto the daily news, folks. It's just the first bounce from the recent surge of selling that we've seen over the last week or so. Once these markets broke that, I'd say that 50-day moving average, they just kind of slipped. And we were waiting for them to find a support level to bounce on, and that happened to be, well, yesterday it looked like it was starting, but today's a pretty good follow-through, as I would expect this bounce to probably continue up to resistance. Slowing in the services and manufacturing PMI, new home sales bumped higher, although, so a little bit more heat when it comes to new home sales, but slowing in services and manufacturing, the flash PMI, if you're looking for some sort of a catalyst, that might have been it, but I think these markets were absolutely due for a bounce. Advanced decline line, 77% participating, about 20% not. 64% of stocks above their 50-day and 36 not. So it was a bounce, but not enough to put things back on track for the majority of the sectors and stocks. Let's just jump straight into the chart, and what you're going to see here is that bounce. And it was a pretty obvious bounce. What I like to do sometimes is just kind of draw a line from where it had that pivot point across to see if it matches up with anything. You guys can see that we had a little bit of a kind of a choppy area through February and into the beginning of this year. And then it just kind of marched away from us, but nothing that really got below that 20-day moving average. Let me put that line back up again. You can see that this move that we've had is a lot more significant, but it is indeed from a very high or top pattern. I talked a lot about this rounding pattern. We've talked about this a lot, where you could see a little bit of a slowdown, a little bit of a rounding in these last few weeks, and then it just kind of rolled off subsequently. Now, one thing to make a note of, and it could change, I mean, it's a pretty good move. This was actually a gap up and moved higher, so it's a pretty aggressive, strong-looking candle, but not a lot of follow-through when it comes to the volume. That could change. I would not be surprised to come all the way back up to this area and touch the 2050 crossover right where it's about to go or turn over, so 5100, 5150, and that could take the rest of the week. Now, we do have a lot of earnings coming out. That could change things, showing some strength, and we are getting into a PCE number on Friday, so we do have those fun little worries about inflation and what the Fed's going to do. Here's the Qs. It had a larger bounce today, right? Over 1.5%, but it's kind of in the same situation. This one looks a little bit more ominous as we do have that crossover. The SPY does not. One thing I'll make mention of is take a look at the volume associated with today's candlestick. Not a lot. That is an absolute bounce off of a bottom. Don't really want to put too much into it past that and kind of just chalk it up to see where these markets go. Overall, everybody participated. A couple didn't. We got Walmart in here, PP. And there's a couple of red ones, probably with specific news as we are getting into earnings season. But as you can see, it's just green across the board. Also, another indication of a bounce. So overall, folks, I'm not going to change too much off of yesterday. I know Corey was a -2, -2, and I'm going to stay there, even in light of this green candle today. The reason being is because it's just a bounce. I really can't change outlook. We do have the 2050 slope. Yesterday and today's candle did help that 50 from rolling over. Otherwise, it would be red, red, and red. And what I mean by that is the 2050 would be red as well. And I could move this to a -3, but it didn't. But I'm still confidently bearish just in light of what's happening. But it doesn't mean the bounce is over. So be patient when it comes to looking for new bear traits. When I do these potential trades, folks, I always kind of just give you the ones that are triggering. So although I have nothing on the bear list, it doesn't mean that I don't love my bears. In fact, all the bears I showed you last week are in absolute bull rallies or bear rallies, excuse me, and or bouncing. But I did like CVS as it's kind of rolling over. On the bull side, a couple things jumped out at me. Of course, AM, IFF, WPM, I mean, they're all, the material sectors make total sense. But Goldman Sachs in the financials and Delta Airlines, I thought was pretty interesting. So there are some selective stocks out there that aren't doing good. In fact, if you guys want to take a look at JP Morgan, take a look at Wells Fargo, there's a few of those larger financials, I think Citigroup, that are doing pretty good. Let's just jump straight into what I liked. And this is Delta. Goldman Sachs is very similar. It's just $400. So, hey, why don't I just show Delta Airlines as it's a $50 stock, but they have relatively kind of the same pattern. And it's this really cool ascending triangle pattern going on here. And so as it's breaking out, we could be a little bit more cautious. Take a look. The volume was not as high as we've seen. I've talked about the volume in a bounce, but this isn't bouncing off of a sell-off. This is actually moving higher through resistance. So diagonal spread, something a little bit more glass half full. You don't have to go super bullish on this just in case the markets decide to have a 2-3 day bounce and roll over. But this thing is showing a little bit more strength. Let's just jump straight over to our bear. And this is CVS. I still like the bears that are on my list. They're still on my list, but they were all bouncing. But CVS looked like it was rolling over. I do believe, I did check this one, it does have earnings on the 1st. However, I just liked how this thing was rolling over. Looks like it just wants to move further. And if the markets continue to show weakness later on this week, or the markets roll over again, I think this will have no problem participating. So overall, just a strong bounce in the markets. Can't treat it as anything outside of that. Watch where this rally goes. It's an oversold bounce for no, and we're at some specific current levels that warrant it. We get back above the 50-day. We go back above resistance. We move a little higher. We see an increase in volume. Okay, now it's a little bit more than just an oversold bounce, but these markets were due for something like this. Durable goods orders and the GDP for Q1, I think, coming out here in the next couple of days, along with jobless claims. But we do have that PCE index on Friday. It's one that the Fed focuses on, and the markets might be a little bit volatile based on what the Fed says or what's in that number. Earnings is all over the place. We've got AT&T, BIIB, Boeing, CME, GD, IBM, and then you guys can read them there. Thursday, there's a slew, so keep your eye out for those, and then even more than on Friday. We'll probably bring you some more tomorrow. So always check the potential trades unless you're trying to play specifically for the earnings. Thanks for joining me, folks, and we'll talk to you next time. Bye, everybody.